Yeah, so we are on bullish trend on GBP USD. So you want to see price moving towards the upside. So first of all, this is the 1 hour time frame. So you pick your open of the day. From the open of the day, that is 12 o'clock. What you want to be looking for is it's a higher price. So you map out your open of the day up till the next day, which is 12 o'clock a.m. So you indicate it, and so you want to add a notation just so you know. Yeah, and again you look for what's the drawn on liquidity. The drawn on liquidity, it's the wick, it's the spike up there, so you want to be adding it there. Just for notation purpose, you have to indicate it on your chart, so you want to be seeing a result of which you likely think this is where it's going to go to. So you map out your Fibonacci tools. Yeah, from the higher side towards the lowest low of that day, or probably the previous day. So now it trades up to break out the liquidity. That's the drawn on liquidity. So you indicate it as well. Yeah, just so you know. So all of these things you want to be noting on your chart. So now you talk positive things towards yourself, and you annotate it in the chart as well, because it brings positivity. Like it tells you that okay, you are in the right direction, that you know where price is drawn to. So just like I said, we are seeking a bullish price. We are seeking a bullish momentum price. So yeah, that's like a magnet there is drawing price towards that upward. And we have been trading discount, so we move out from discount down to premium. So price will continue to go up to seek premium price, but before you seek premium price, it needs to retrace down to some level of discount or some imbalance, but it has to align with the purpose. So you could see the Fibonacci retracement tools there, and that's the exit. So that's the final place. The red line had to break up to the side. Now you are drawing back the open of the day again. Yeah, that's the open of the day again. Now up to the next day. So we are just simply back testing, just so you know that you know what you're doing. So now you want to seek price to come downwards to discount before entering a position to go bullish, because whenever we are bullish, the PDRA is bullish, the narrative is bullish. You want to be seek discounting price first. You are buying below the open of the day. So that's exactly what I'm trying to annotate using the Fibonacci tool. You can see the red line. That's the drawn liquidity there. So that's the highest high of the previous day. So price came down. All of those things happening there, they are just liquidity. So price is going, seeking and destroying. So those weak are just trying to, tell you that price is seeking discount to go higher. So, and you could see the long wick that spike up. That's news. So there's a relatively equal high there. So that's the news that has to spike up, and it go out up to break the relatively high, and again coming down to collect the overall liquidity downwards. Pardon me, my keyboard is not really functioning fine, so I make use of external keyboard. Yeah, so it came down to seek the discount, the real discount, as you can see it draw down to the red line, and not just the red line alone, because you can see the fair value gap, other block with the fair value gap. All of this confluence and confirmation, you need to take note of it. Yeah, you need to take note of it. So price go up straight immediately, and it keeps on sticking higher in price. So that's your other block with fair value gap. It shows that you are in the right side of the market. Yeah, that's it. So price is extremely bullish, so it doesn't have to return back towards the extreme discount. So that's why it just have to tap into the other block and run off straight. You can see the last liquidity it came to collect. Yeah, that's the last liquidity it came to collect there. So all of this narrative, and basically you just have to know what price is doing because it's telling a story. You can see all of those candles weak downwards, making downwards. They are just creating liquidity down and making price to say, okay, I'm coming down to collect those liquidity, tap into the other block. Because you could see the first time it came to collect liquidity and seek discount in price, it didn't tap into the other block, neither the fair value gap. But this time around now, it's tapping into the other block and the fair value gap, which means that is exactly what price wants to do. Now you extend your position up through, then if you can get approximately risk to reward of 1:4. Yeah, so it's pretty cool, and you're out of the market as easy as like that. So you can see another time again, price have to retrace again, using your Fibonacci tool from the high of the day to the low. Then you can see price came down to discount. The same fair value gap and other block, just like it entered the previous time. So all of those things, yeah.